Thank you for the invitation to speak here with you for the next 10 minutes. My title is a little bit weird, right? But that's what we do in the UN. We have like long nobility titles. But what I do really, in reality, is I'm in charge of the investment side of our pension fund. This is the pension fund of the United Nations staff working for all the United Nations entities around the world. We have 25 different UN entities, and all their employees contribute to this pension fund. We serve 250,000 people. 160,000 are active employees of the UN working in UNICEF, World Health Organization, World Meteorological Organization, all of those that you know, and some of those that you don't know. And we have close to 80,000 retirees already working. We manage a portfolio of $96 billion. $96 billion. We have 43% in public equities, managed mainly internally. 40% in fixed income, also managed mainly internally. And the rest, 17%, it's half of it. Most of it is half of it is real estate, half of it is private equity, and a small allocation to infrastructure. We do all those investments basically through co-investments or in funds managed by GPs. As you would imagine, we aim to be one of the most responsible asset allocators in the world, right? We feel that we are part of the responsibility of being the stewards towards completing the Sustainable Development Goals. So in what we do, which is investing, we try to align our investments to the Sustainable Development Goals, becoming the most responsible asset allocator. Of course, we are founding members of the PRI, so we believe fully on the PRI principles. So we aim to be responsible investors. Recently, a couple of years ago, we received also the mandate of the General Assembly to start including impact as part of our analysis for our worldwide portfolio. And we take it very seriously. We take it so seriously that I see Toru Shindo, our Chief Investment Officer, is here today as well as Kenza, our expert on impact, because we take it very seriously. And we took a very different approach from the approach that other asset managers have taken, right? Because the first question when you want to do impact or sustainability or responsible investment, people ask you, what percentage of your portfolio will you be allocating to this, right? And our answer is, our aim is 100%. Our aim is really that all our portfolio could be responsibly aligned and with measurable impact. For us, committing to 1% or 5% or 10% or 20% will always be challenged, saying why so much or why so little, right? We want all our portfolio to become impactful and responsible. Of course, we know that there are certain operations, certain investments that we have that it will be very difficult to measure impact, right? But we aim to include impact and alignment to ESG and everything that is related to responsible investment in all our asset classes. So that's our aim. And we know that for doing that, we have to start little by little adapting the analysis and adapting the measurement to the different asset classes, from public equities to fixed income, whether they're corporate bonds or sovereign bonds, but also in the private markets, which sometimes could become easier because in the negotiation with the GPs and identifying the projects, it's easier to implement both sustainability and impact. So that's who we are. And one of the most important things that I wanted to share today with you is Toru and I, we just came back yesterday from Cali, Colombia. Anybody have an idea why we were in Cali, Colombia? Raise hands. Very good. Well, for those of you that don't know why we were in Cali, as we speak, the COP16 on nature and biodiversity is taking place in Cali. The COP16 is the most famous COP that you are probably familiar with, is the COP on climate, right? The specific COP only for nature and biodiversity. Of course, they're completely interrelated, but it's a different one. There are talks that probably to merge both of them. But why is it so relevant, this COP? And it was shocking to see the level of participation from everywhere, literally everywhere in the supply chain. From, of course, policymakers, representatives from countries there, that they stayed there behind. Yesterday, our boss, the Secretary General, arrived there to work with heads of states and ministers to get agreements on what targets will be created globally to improve the biodiversity and protect nature. So there were policymakers, but there was a lot of people also from the industry, right? From every industry that you can think of, can have a positive impact or a negative impact on nature and biodiversity. And of course, there was a lot of people from the investments and finance world, right? Because those things, that transition and protection has to be financed, right? So what I was convinced after being there in Cali and listening to all these discussions, nature and biodiversity is the best thing that we could use to do impact investing, right? Everything that will come through there, from saving the Amazons to protecting different flora, fauna, other things, are things that can be scientifically measured. And that is exactly what we want for impact, right? We want to invest in things that will give us a return that is adequate for our objectives in the portfolio, but also that we can measure the impact. So I see a big trend on impact married with nature and biodiversity to finance all those needs that we have there. There's, as always, big numbers, right? And they say that it will be needed something around $200 billion a year from here until 2030 at least to start getting to the targets that we will see there. So I invite you all to start seeing what the agreements will be there, what the targets will be there. There will be targets that will be global, there will be targets that are national, and of course, as you know, most of the effects of the destruction of nature and biodiversity, climate change. So we will need to be deploying a lot of capital to finance nature and biodiversity projects in the global south. And then, of course, it comes the challenges. That's the opportunity, right? And it's a big opportunity. And we all, institutional investors, we are all after that, right? We want to invest in impact. We want to invest in impact with things that matter to attain the sustainable development goals. That's the opportunity for all of us as investors, for some of you as managers and project makers. Now, the challenges that we're facing from our perspective, and that's where I'm gonna stop to get your comments. The challenges that we're facing is there's a lot of fragmentation out there in projects and in the options that are presented to us as investors, right? Let me use our case as an example. Whenever we come to private markets deals, we are designed to analyze investments that could be at least $150 million, right? And of course, as you know, we have concentration limits. We cannot have more than 20% of a fund. So if you multiply the $100 or $150 million, that means that very easily we have to start talking about funds that are close to the $1 billion, right? And we're being approached by a lot of fund managers that come with very small projects, right? So one of the things that we're asking to the market is more concentration, scale, so that it's easier for us, large investment offices, to be able to even process and make economic sense to analyze the projects that we are analyzing. So that's our plea always to the market. Have more projects, concentrated, have scale. It will also offer a lot of economies of scale. Costs will be lower. And also you will have diversification on it, right? A project that is $150 million that is concentrated in a certain area, it's not as attractive for us. And the last thing that we're doing as as institutional investors is we are negotiating and putting pressure on policymakers to come up with clear rules to align all these incentives. So it will be a matter of bringing scale, getting the policymakers to agree on what the goals should be, and then de-risking, right? And that is where you, asset managers, fund managers, you have to find a way also to de-risk these things, right? As I said, most of the needs for capital will be in the global south. By definition, it's risky because of the economic situation, but we will have to find together ways to de-risk those things using, of course, guarantees from the multilateral development banks, their own governments, and so on and so forth, so that we can deploy this amount of capital. So, all in, I think that we can make it $200 billion. It's easier to deploy if we have all the infrastructure together. So I'm going to stop here because I'm hearing the bells. I hope that this was useful for you, and I will be very happy to answer any question or any comment that you might have now, but if not, I will stay around if you have any other question. Thank you for your attention.